Picture a British high street. Rain on old paving stones, a queue at the post office, a familiar blue and yellow sign above the door. For more than 200 years, that sign usually said, W. H. Smith. Now, in many town centres, it either reads closing down or a new name, T. G. Jones. This change is not an accident or a slow fade. According to W. H. Smith's own announcements and reporting by The Guardian on the 28th of March 2025, the company chose to walk away from the British high street almost in one move. It sold its entire United Kingdom high street business to Modella Capital for £76 million. In this film, we are going to look at the real reason why. To understand what happened, we have to separate one brand into what W. H. Smith itself came to call two businesses. The first is the part most people grew up with. Stationery, books, magazines, birthday cards, gifts and post offices on the high street. By the year ending 31st of August 2024, this side brought in £452 million of revenue and £32 million of profit, according to The Guardian. The second business looks very different. These are the travel stores in airports, train stations, hospitals and motorway services in the United Kingdom and overseas. By that same 2024 year-end, the travel division produced about 75% of W. H. Smith's total revenue and about 85% of its trading profit. That split was also reported by The Guardian. So by 2024, 3/4 of every pound W. H. Smith earned already came from travel locations, not from town centres. Almost 9 out of 10 pounds of trading profit were coming from people passing through airports and stations, not from regular shoppers on a Saturday afternoon. That is the backdrop. Then, in early 2025, the gap between these two businesses opened even wider. For the half year of 2025, W. H. Smith reported that its travel division made trading profit of £56 million, up 12%. The high street division made £15 million, down about 32%. Travel revenue reached around £1.6 billion, growing about 11%. High street revenue in that same half year was £239 million, with sales falling 7%. These figures, drawn from W. H. Smith's 2025 financial updates, tell a simple story. Every time the company invested effort into travel, profits and sales rose. Every time it poured energy into the high street, the return fell. Many people still believed the high street stores were the cash cow that funded fancy airport shops. The numbers show almost the opposite. By 2024 and early 2025, the high street had become a drag on the group's results. So why was travel doing so well? In airports and big rail hubs, W. H. Smith has what retail analysts call a captive audience. That phrase means customers have limited choice and are unlikely to walk to another store, especially once they are through security. In 2025, W. H. Smith reported a 4% increase in average transaction value per passenger in airports. People were spending more money in each visit. By late 2025, the company said that the air channel alone, meaning airport stores, made up more than 70% of the whole group's revenue. Put simply, more than £7 in every 10 W. H. Smith earned came from airport terminals, not from your local high street shop. At the same time, like-for-like sales in the high street division fell about 3% in the 21 weeks to the 25th of January 2025, according to the Financial Times. Travel division sales in that period rose about 6%. The mainstream belief is that W. H. Smith failed on the high street because people just stopped buying magazines and pens. That is only part of the story. According to analysts quoted by The Guardian in January and March 2025, high street economics had become increasingly unforgiving. Rents and business rates went up. Footfall dropped as more people ordered from Amazon and other websites. Store chains all across Britain were under pressure. A report by PwC on store closures in Great Britain covering 2024 found there were 12,804 store closures and 9,002 openings. That meant a net loss of 3,802 shops, which works out as 35 shops closing every day. High street chain outlets fell at about a minus 2.4% rate that year. W. H. Smith was swimming in that same tide. But here is the twist. W. H. Smith did not simply get pulled under. It chose to swim a different way years before the sale. The company's travel story did not begin in the 2020s. It started in Euston Station, London in 1848, when W. H. Smith opened what is known as one of the first railway bookstalls. Over the next century and a half, it kept that travel strand alive. By the early 2000s, growth in travel had picked up again. The Guardian notes that from the early and mid-2000s onward, travel operations grew while the high street became more challenged. Then, in June 2023, W.H. Smith's chief executive, Carl Cowling, told The Guardian that the company would no longer open any new United Kingdom high street stores. It would instead focus on travel retail in this country and expansion into the United States and Europe. That was the first clear public signal. The high street was no longer the future. In that same period, W.H. Smith shut 14 high street stores in 2023. Retail Gazette reported that the plan was to close about 20 high street stores per year between 2023 and 2026, even as the group planned to open around 90 travel format stores. So by January 2025, when The Guardian reported that W.H. Smith was exploring strategic options for about 500 high street stores, including a sale, the retreat had already begun. The company was trimming leases, closing unprofitable sites, and pouring investment into airports and stations. The North American push shows how far that shift has gone. As of early 2026, W.H. Smith had a pipeline of over 90 new travel stores won and yet to open worldwide. More than 70 of those were in North America. Group figures for 2025 showed North American revenue growing 7% in constant currency, helped by big airport contract wins at Dallas, Denver, and Washington Dulles. While shoppers in British town centres were seeing closing down signs, American travellers walking through major United States airports were seeing brand new W.H. Smith and partner-branded stores opening. Travel was not a side project. It had become the new high street for the company. That brings us to the moment many people remember, the sale. On the 28th of March 2025, W.H. Smith announced it had agreed to sell 480 high street stores to the private equity firm Modella Capital for £76 million. The Guardian reported that Modella would rebrand these stores as T.G. Jones from around June 2025. About 5,000 employees worked in those high street shops. Many of those stores also hosted post offices. Local outlet in your area reported that up to around 200 post office branches were at risk, although Modella pledged to keep many of those services. W.H. Smith told investors it expected to receive around £25 million net after costs from the £76 million deal. Carl Cowling called it a pivotal moment as W.H. Smith became a business focused only on travel. At that point, the group still ran around 1,300 travel stores worldwide, according to The Guardian, and those remained under the W.H. Smith name. Modella, which already owned Hobbycraft and the original factory shop, installed W.H. Smith's own high street chief executive, Sean Toll, to lead the new operation under the T.G. Jones banner. Some retail analysts warned that up to half of the 480 acquired stores could still end up closing under Modella if trading remained difficult. The Independent and Guardian both raised that risk in their coverage. Critics asked whether rebranding to T.G. Jones weakened 2 centuries of heritage. Some media and social posts called the new name silly or idiotic, according to reporting by news.com.au. Supporters argued that a new brand could make it easier to refresh tired stores without the baggage of old expectations. This raises a deeper question. Did the high street fail W.H. Smith, or did W.H. Smith give up on the high street too early? The mainstream view is that British high streets are dying and that chains have no choice but to escape to out-of-town retail parks or airports. The PwC data on 12,804 closures in 2024 backs the idea of severe pressure. But another reading of the W.H. Smith story is possible. By the year ending August 2024, the high street division still made £452 million of revenue and £32 million of profit. Those are not trivial numbers. For many businesses, that would be considered a decent, if modest, business line. The real problem for W.H. Smith was not that high street shops made no money. It was that every pound tied up in leases and stock on the high street was a pound that could be working harder in an airport, especially in North America. When the travel division generates 75% of revenue and 85% of trading profit, as The Guardian reported, and when airport sales per passenger are still rising, management sees a clear choice. Stay split between two worlds or become what investors call a pure-play travel retailer. In March 2025, W.H. Smith chose the second path. The sale to Modella did not just remove a headache. It turned a 230-year-old high street name into a focused, global travel operator. By early 2026, that split is visible on the ground. On many British high streets, the W.H. Smith name has disappeared or is in the process of being replaced by T.G. Jones. Some locations are closed altogether. Post offices inside affected branches have been left in limbo, with the Communication Workers Union raising concerns about job security and local services. Inside airports, train stations and hospitals, the W.H. Smith name is still very much alive. More than 1,300 travel stores worldwide continue to trade, with over 110 new travel branches planned to open during 2025, according to Time Out and other coverage. The company that began in a little shop in Little Grosvenor Street, London in 1792 and opened its first station bookstall at Euston in 1848 has come full circle. Its future now lies in the places where people move, not in the streets where they live. The story behind W.H. Smith's move away from city centres is not just about decline. The numbers from 2024 and 2025 show a deliberate swap. 480 British high street stores, £32 million of profit, and centuries of habit traded for a fast-growing network in airports from London to Dallas and Denver. For some, that feels like a loss that cannot be measured on a balance sheet. For W.H. Smith's board and shareholders, it looks like a clear financial decision. The high street version of W.H. Smith has gone. The travel version is still with us, from Gatwick to Washington Dulles. The same blue and yellow sign, two very different futures.